So talking about the Apple and the Amazons of the world, that leads me to high beta tech. That's been a leading sector. It's kind of reclaiming its position as a leading sector. What are the winners and what are the losers you need to pay attention to in this space? You mentioned Apple and Amazon as the two biggies.
Yes, first I just got to show you the chart. Apple gave a lot of, just say, opportunity. Okay, we're not there quite yet, but here we go. This was the day that that Steve Jobs passed away, unfortunately, and this was the day that it was buyable. Okay, versus the low here. If you remember on CNBC, I talked about this 200-day moving average probably holding. Here's your support. Then this was your next buy when it cleared this mini pivot around 385. This is when it started to get acting better versus the relative weakness you saw over here. And now it's coming back up to the highs. I would say today is not the day just to buy Apple, considering we just had a big move. But if you're macro tier 1 long, which we've been recommending to anyone with a long-term thesis, I think you stay the course. If you're long from this breakdown, you probably could sell some into this 405, because I do think Apple pauses here, but it's at any particular point, it's going to make new highs, and Amazon is the same way. Amazon gave you leadership when stocks were weak. It held higher. It held the upper moving average and always showed relative strength, and now it's on its ways to new highs. If you look here on Amazon,
Hasn't seen that big pause though, has it?
no. So that's why sometimes you just got to go after it. This was the reversal. This is when it broke below the range, and you could have bought it back here around 208. And then this was your add-on buy for momentum. So just say here was tier 1. Here's your tier 2. Maybe sell tier 1, or get back to tier 1 into resistance, but make sure you hold this, because this is one of the best acting stocks.
And then on the flip side, Netflix, though, has not been showing any leadership whatsoever. I'm assuming you want to totally avoid this. It's totally out of the list now, right? It's
been off the list for a while. A lot of people were naysayers on Netflix from 150 to 300. They were saying fundamentally it was flawed, but is that saying can you be right and stay solvent? And those who couldn't handle it got squeezed. That's why we say with technical analysis, you wait for the trend to change. When Netflix broke its uptrend and showed relative weakness, that was the time.
Do you think it's overdone though, considering we have seen some upgrades last week and it just ignored them?
You know what? Give me more upgrades, because that day that the stock was up $10. Okay, we looked at it. I was saying, let me buy Netflix here. Maybe it's enough. And then, came on TV that Goldman Sachs upgraded Netflix and the stock couldn't go higher. That was a sure signal to get short the thing. So if you look at the chart, you'll see what I'm talking about. Here is when it broke this long-term uptrend, okay, dating all the way back. And then it changed, obviously. It made, high, lower high, lower high. Let's take a closer look of this recent range down here. I remember on the show we talked about if it were to break 125, you can get short. Nice short right here, worked its way back up. This was when it got upgraded. This is when they said they want to split the service, and it was sold right into resistance, and now it's at the lower end. I still think you just avoid it. Most traders are a little frustrated with it, but if you've been net short this thing, you're making money, but at this point, it's just too depressed where you can get hurt. Just stay away. Some stocks you just need to stay away from.
All right, and then Google, kind of on the list, off the list, sort of seems to be running up into earnings, which is reporting after the bell on Thursday. How would you be handling this name?
Google on last Thursday, I had Jill here on options profits, so we said it's a good area to buy, that it should participate. It was downgraded that day, and it went positive. To me, that was a technical sign in Google. If you look at the chart here, you will see on Google, this was the day it put its low in, okay, after the move from the highs. And then this day, it was downgraded, held and matched the lows, and this was your way in, okay. And since then, it's had about a 70-point rally right back into this range. I'm hoping the earnings are good and they have a great conference call, so it'd be nice to have another vehicle to trade. The stock's been in a 2-year range between 450 and 650. My message to their CEO is split your damn stock. Okay, it's just too much of a blimp out there. Like I'm telling you, Baidu, I keep talking about it. It split 10 for 1 when it was at 700. Now it's like 130, so it's at 1300. Google's in the exact same spot because of the infrastructure. Institutions want to split, investors want to split. Split your stock, drop your ego.
Okay, aside from that, in terms of the running into earnings, be careful. That's what happened with Alcoa, and we'll talk about Alcoa later in the show. So if a stock runs into earnings, something to note, it might not get that pop even if it meets.
Right, and if you're a trader, if you want to take some risk into the earnings, don't do it. Either trade it after the earnings are out, because there's an art to trading in the aftermarket, which we do. But for you, I would take some calls. Know your premium paid. There's a big premium in Google. But if it does blow it out and it does get going, you can get paid handsomely, but know your risk by taking those calls.
And really quick, we have 30 seconds. Want to hit on Sina and Baidu. It showed a lot of leadership yesterday. Are you expecting that to continue?
Well, these two stocks broke down technically, so we got flat like a month ago, but doesn't mean you can't get back in for cash flow. I'm going to show you two quick patterns. If you look here on Baidu, you will see this was your time to exit when it tried to break out and failed and then broke this uptrend. And then you had a little bit of an entry right here. It's been acting better, probably fills the gap up into about 140. Yesterday, Sina was my focus because it was breaking this short-term downtrend. You look here, last time we really spoke about it was when it was a sell signal when it broke on a really potent down day, but now it's trying to regroup. So I did enter the stock yesterday around 78.50, and I think it can get up to about 90. And then that's just a good trade from the lows to the highs, and then, big resistance. So these have turned more into trading vehicles because they're a bit dangerous than macro tier one holds.